This is the appraisal contingency rider to be attached with any offer on the Florida FAR bar as is contract. This is where you're wanting to make sure that your buyer can back out of the purchase if it does not appraise. Keeping in mind that there is a built-in appraisal contingency in the FHA and VA rider if it is those types of mortgages. Typically, if it's a conventional and less than 20% down, it's still generally considered built in because if it doesn't appraise, the lender will usually issue a decline. But if it's going to be more than 20% down, if it's a strong buyer, you pretty much want to protect your buyer by placing one of these with the offer. Because if the mortgage company or bank sees that there's already more than 20% down on the property, they're not in a bad equity position and they might not necessarily deny the mortgage if it does not appraise. So with all that in mind, this is the appraisal contingency. You're going to list the sellers, the buyers, and the address. The buyers are going to initial this as it goes in with an offer, and the sellers will initial it if they agree and sign the offer and go under executed contract. Now, what it says is the contract is a contingent upon the buyer obtaining, at buyer's expense, of course, a written appraisal from a licensed Florida appraiser on or before, if left blank, 10 days prior to closing. Now, this is cautionary in the FAR bar as is contract. You will see that everything, including the appraisal, has to be done and everything worked out with that. Any negotiations, if it doesn't appraise at value, within the approval period. So they need to be ordered early, and all that needs to be done earlier than it was in previous years. So you might want to put a date in there, maybe 20 days in, to make the seller feel a little better about this contingency and not having to wait until 10 days before closing. It goes on to say, stating that the appraised value of the property is at least, well, the purchase price. You're going to want to put in your offer purchase price here, and if for some reason you would forget that, it does have provisions saying the purchase price. If the appraisal states the appraisal value of the property is less than that value, buyer shall deliver a copy of that to the seller within 3 days after this date, with a written notice to the seller either terminating this contract and getting their deposit back and releasing buyer and seller from future obligations, or they can waive and remove this contingency and bring the extra money to closing. Third option, not in writing here, that all good agents and brokers know, is you can try to negotiate. If it's like a $5,000 difference, a lot of times I have seen the buyer go up to 2,500 in value, bring an extra 2,500 to closing, and the seller come down 2,500 in price with a price change addendum, just to work it out to get the deal done. But if you have any questions on those negotiations, you can contact the broker.